Hey everyone, we're going to dive into Bitcoin today as we've been clinging onto support and we're waiting now to see a break very soon from the resolution of this consolidation pattern that we've now been in for about 2 weeks. An important video for all you Bitcoin holders, so like, subscribe to the channel if you haven't already, and without further ado, let's just get straight into it. So since our last video, Bitcoin has been within the range and in this consolidation pattern at between about $24,000 and $22,500. And so far, it has been showing some strength and is holding support, and it's support until it's lost. So we have to assume that this is going to hold and for the time being. But I do want to make you aware of some of the scenarios that we spoke about in the last video, because I just want to dive this straight back to the DXY, because we did say on the DXY in the last video that if we start to see some follow through and some strength on the DXY, this will put pressure on Bitcoin. You can see that this is bringing us down on Bitcoin to the lower end of the consolidation range that we've been in for the last 2 weeks since the DXY has broken upwards. And if you go back to my last video, I said exactly this scenario. I said if the DXY breaks this low and causes some kind of swing failure pattern and then comes back into the range, this is likely going to cause pressure on equities and risk assets, and that's exactly what we've seen. So you want to be keeping an eye on this in the DXY, because if the DXY can actually show some more follow through and strength in the coming week, and we can reclaim this range that we lost, okay, between about 103.5, okay, to about 105.5, then I think again this is probably going to lead to Bitcoin having a next leg down. And you can see that there's a decent chance that we might make it there, because the DXY, since its massive drop into this area of support, has not even actually retraced to the 236, and typically moves, even if they are very bearish, will move to the 382, which is up here at about 106. And I said to you that if we get a move over here on the DXY and we get some kind of push into these levels that I spoke about, okay, then, you know, expect to see Bitcoin drop about 10, 15, possibly even 20% to some of the support levels below us. And you have to bear in mind that these moves are not instant and not instantaneously synced, should I say. So what I mean by that is, just because the DXY pushes up for a day or two and people saying, oh, look how great Bitcoin's reacted, we haven't dumped below this level, okay, it's basically a sign that the tides and the pressure is shifting more onto Bitcoin. And it's almost like a pressure cooker where, you know, as the DXY continues to show more strength, okay, it puts more and more and more pressure on Bitcoin and risk assets. And you can see that some of these support levels, okay, are getting tested, and the more a support level gets tested, okay, the more it is likely to break. So the short-term timeframes are still telling us that we need a break and maybe possibly retest some of these lower levels. And you can see that just as before we were starting to push to these higher highs, okay, you can see that we're just creating some market structure, okay, at this moment in time, where we've come down, okay, and basically retested a bearish order block, which is this level over here, okay, at about 23.4 thousand. You can see that we broke down from this level, and if we just bring this up onto the 4 hour, you can see quite clearly that when we actually broke down from this level, okay, we had this sort of a fair value gap over here. We came back down, moved up, and we've wicked up overnight after that FOMC meeting yesterday, and come down to retest this level again for a third time. And it is my genuine belief that it's not often that support tends to hold after about 2 or 3 times, okay. It does tend to break, because the more times the support is tested, you know, then the weaker it's going to get. And you can see that just as we're creating some patterns over here of higher highs, we're now just starting to create some deviations over here, and potentially, you know, curling over as the buying is subsiding and there's a little bit more selling taking place. But that's not to say that you should be necessarily bearish over here, because we are still structurally, technically still creating higher lows. And so long as Bitcoin can maintain this low, in my opinion, of 22.6, then I think you still have to assume that the trend is up. I've seen plenty of these continuation patterns where just because the price is overextended in the short term does not mean that we have to correct downside. It means that we can still correct to the side and, you know, still potentially then move a little bit higher. But if we do break this floor at about 22.6, okay, I think that this level is likely to be quite an impulsive break. I think that you're more likely to just turn your phone on and all your alerts are going to be snapping off, and we're probably going to get a bit of a god candle down to retest this level if we break it. I don't think this is going to be a steady grind down like this. I think it's more likely that we move down here at quite a fast pace. And bear in mind that Bitcoin is only corrected about 7% from the highs, okay, 6-7% at the absolute maximum. So, you know, it would not be surprised. Remember, this is cryptocurrency, and, you know, drops of 20% are pretty common. And like I said, those levels down below us are going to be just over here at this next order block, very clearly at about 21.7, 21.6 at the earliest. And depending on how we break down here, okay, remember, we do have some CME's gaps that we've been watching. And you can see that on the CME chart, I did say to you that all CME gaps tend to get filled. And you can see that even this week, we had a beautiful, you know, gap down and a just easy fill here, okay, to fill that gap and then move back down. So like I said, where is the next gap below us? We've got this down here in green. And like I said, that if we do break down from this, the other reason that it's probably going to be quite impulsive is that the more cores you build up, so the longer the consolidation pattern sideways, whichever way that tends to break and whatever way that resolves does tend to be, you know, equal in magnitude. So basically shorter corrections will lead to smaller impulses, okay, and you can see again that larger consolidation patterns at certain levels, okay, lead to bigger impulses. So what I'm trying to tell you here is that if we do break down from here, then I think that, you know, it would make sense to me that basically Bitcoin can at least attack this gap over here, which would probably be quite a nice buy zone for Bitcoin at this CME gap of about $20,000. And although all of the TA is pointing for us to have at least a little bit of a break, a little bit of a pause, just remember that we can still get one more final push up, in my opinion, in these levels to some higher prices. And like I said, that's probably going to coincide for me at this range high at about $25,000, and potentially we get some kind of deviation, slight deviation above these levels. And I just really want you to be aware that, you know, if we break out from here, I don't think this is necessarily a buy, especially not an instant buy, okay. I think this is the highest that Bitcoin can go in the short term without having any further correction. So if we do manage to you know, break out from this consolidation pattern on Bitcoin, and we basically move to the upside, then I would be looking for a potential move up to here at about $25,000, which would mark an increase of about 9 to 10%. A lot's been made about this bullish golden cross for Bitcoin on the daily time frame, with the 50-day moving above the 200-week moving averages. But in my opinion, I don't think this is too much to read to. These are lagging indicators, and you can see that if anything, I think these golden crosses tend to be more of a sell signal more than anything else. And you can see that the last time that we got these this golden cross, okay, that we actually managed to drop a good 18% back in September 2021. You can see that again, like that, all of these seems to result in at least a short-term pullback, 13% back here in 2000, okay. Again, another one here, that was the COVID low that we actually crashed below when we actually got the golden cross. And even the golden cross, when we had that massively impulsive move in the last bear market, okay, still resulted in a correction of about 10%. So I wouldn't look at these indicators as something that is reliable to show you that Bitcoin is going to move in any direction, and if it tends to move in any direction, it always tends to be to the downside. Another reason that I want you to be cautious, not just at these levels but on a macro perspective, is that Bitcoin is actually below all of its key monthly moving averages on the Fibonacci timescale, okay. And you can see that we've got the 21, the 8, and the 55, and we can see that this is coming up against some serious resistance here, which, like I said, is confluence with a lot of the other indicators that we've spoken about. So it makes complete sense to actually have a correction here. And even in the last bear market, when you can see previous bear markets, that when we've actually been below these levels, okay, that there is some sort of pushback and some sort of consolidation, you know, towards lower prices, then we get some kind of rejection there. rejection at those levels. In the last bear market, you can see that we never actually properly got below that 55, but we did manage to stay in between the 55 and some of the other key moving averages. So like I said, there's just a lot of confluence here that at these levels it makes sense for Bitcoin to fill some prices lower, and in my opinion that correction will obviously come at some point this year. And the real question, the real test for me is going to be whether we move up to 26 and then we move back down, okay, or whether we move straight down from here, as we have spoken about before. Is that pullback going to be the pullback that leads us onto new highs, or is it just going to be a pullback that continues to be a pullback until we reach 14k and reach some of those lower order blocks? So let me know down below with where you think Bitcoin is headed for the rest of this year. Guys, don't delude yourself. Nothing goes up in a straight line. Even if you spend 10 hours on Twitter, will not make Bitcoin go straight up with zero pullbacks, right, guys? Live in reality, okay, and live with the probabilities rather than living in hope, okay? So I just want you to bear that in mind, okay? Don't just buy into a bunch of hopium, okay? Wait for your levels. You'll get to your chance this year. I think this year is very much likely to be a period of accumulation either way. I think it's going to be sideways and up. Even if we reach some of these loftier targets at about 36k, I still think that this year is going to be some kind of year of, you know, accumulation like this. And you know, you're going to have plenty of time to buy Bitcoin, okay? So, you know, the fact that we haven't tested some of these lower levels, you know, the chances of us testing them at some point later this cycle, in this bear market or later this year, I still think are very high. So I hope you got some value from that video. If you did, like the channel, subscribe as well to keep up to date with my weekly videos. And until the next one, I'll catch you guys in the next video.